from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Joe Rogan apologizes and Spotify shares soar. How the streaming service is addressing the turmoil over the world's most popular podcast. Plus, Bitcoin closing out a rough month, down more than 20% just this January, the worst since last May. We'll be joined by FTX CEO Sam Bankman-Fried, fresh off a new $32 billion valuation. Why isn't the exchange feeling the crypto winter? We will discuss. And out at Bolt, the young company CEO stepping down just 2 weeks after helping secure billions in valuation for the fintech startup. What's really going on here? We'll discuss all that in a moment. But first, let's get to the markets and a massive rebound for tech stocks. Our Ed Ludlow here tracking it all. Ed?
Yeah, so there's volatility in the markets, right? You look on the board, a 3.3% gain on the Nasdaq 100. Nothing to write home about. But if you take it on a two-day basis, we think about Friday and Monday session, that's a jump of 7%, biggest two-day jump since November, and it's really focused in technology shares, right? You see it as well in the Philadelphia Semiconductor Index, up 5.5% Monday, but experiencing that big two-day leap. And what's interesting is investors still focused on the outlook for the Fed and higher rates. You see the US 10-year yield up by a single basis point, 1.78% on the US 10-year. And in this risk-on environment, we got most of the cryptocurrencies that Bloomberg tracks up higher. The Bloomberg Galaxy Crypto Index up 6.5%, biggest jump since November. Let's get to some after-hours earnings as well. NXP Semiconductor, European-based, of course, but the second biggest supplier to the automotive sector. We've been up much more than that in after-hours, up just 0.5% now, but really strong outlook for the first quarter. Revenue of $3 to $3.18 billion, and it's basically saying demand is still there, but inventory is still very depressed. And so that's really important in the context of that supply chain crunch that we've seen. We'll talk about that later in the show. M&A news, Emily, M&A news. Look at these two companies, Sony and Bungie. And this is really cool, right? So Sony, hot on the tails of that Microsoft Activision tie-up, buying Bungie for $3.6 billion. I'm a big Destiny 2 fan. I play a lot of Destiny 2 on my Google Stadia device. But what's so fascinating, Bungie was one of the original developers on Halo, which is the big Xbox hit. You see Microsoft making moves, Sony retaliating. Okay, it's a much smaller deal, but really interesting, this space. Hotting up, third kind of deal we've had, of course, after Take-Two got its guns going earlier in the month. And finally, let's talk really quickly about Spotify. Spotify jumping more than 13% on Monday. That's the biggest jump since October 2019. Now, I don't normally do this, but I'm going to do it for you, Emily. This is a six-day chart. Okay, six-day chart, bear with me. 13% gain on Monday, but we were down so much on Spotify last week with all the furore around Joe Rogan. So what has that jump today done? It's erased the losses of last week. All 5 days of losses gone. You don't see that very often, so a little treat for you, because I know you're going to talk a lot about this story.
The power of a Joe Rogan sort of apology. All right, Ed Ludlow, thank you. On that note, Spotify star podcaster Joe Rogan taking to Instagram to address the simmering controversy that he peddles COVID misinformation. Rogan pledging more balance and better research for his shows.
My pledge to you is that I will do my best to try to balance out these more controversial viewpoints with other people's perspectives so we can maybe find a better point of view. I don't want to just show the contrary opinion to what the narrative is. I want to show all kinds of opinions so that we can all figure out what's going on, and not just about COVID, about everything, about health, about fitness, wellness, the state of the world itself.
Singers Neil Young and Joni Mitchell pulled their music from Spotify last week to protest Rogan, who has hosted outspoken critics of vaccines. And Spotify is now also doing damage control. Jennifer Zabajaja of Bloomberg Quick Take joining us now to talk about how this is going viral. Viral indeed. Jen, talk to us about what Rogan had to say, whether or not it was enough, and what Spotify is doing differently now.
Yeah, Emily, I mean, you just saw a snippet there of Joe Rogan speaking in what ended up being almost a 10-minute long video talking about how he is pledging to do more and have diverse voices on his platform. But Spotify, for their part, they were waiting to put out any sort of information, but they did put out a set of rules which they say are governing acceptable content. But I think it's important to note these rules had actually been in place with the company prior to this Joe Rogan fallout. They just decided to make this public. One of those steps that they plan to take is adding warning labels to a podcast that discuss things like COVID-19 and instead directing listeners to experts and other outlets that maybe can verify that information. But without mentioning any specific names, CEO Daniel Ek said that it's important to me that we don't take on the position of being content censor while also making sure that there are rules in place and consequences for those who violate them. And we just heard from Ed. I mean, these comments alone sent the company's shares up 13% closing today. So something for the company, but definitely not an issue that's going to go away anytime soon, Emily.
All right, let's talk about how Spotify is still, at the bottom of it all, doubling down on the Joe Rogan experience. How important is a podcast like that to the platform? I mean, they talked about how they've, gotten rid of 20,000 other podcast episodes for this very reason, COVID misinformation, but certainly Joe Rogan is their star.
Yeah, and I think, Emily, I mean, that's such a great point, and we have to note that Spotify knew what it was getting into when it signed Joe Rogan just 2 years ago for what's a deal that's estimated to be worth about $100 million. He already had a fan base, so what they were doing was exclusively getting Joe Rogan's views, Joe Rogan's subscribers onto the platform. And if we just think about how many viewers or how many listeners Spotify has, they have an estimated 172 million paying subscribers. So the subscribers that are listening to Joe Rogan, almost 11 million listeners a week going to Joe Rogan's podcast, that is important for the platform. So while, with all due respect to Joni Mitchell and Neil Young, those two artists pulling their songs from the platform isn't as meaningful than someone like Joe Rogan. So we're going to have to see really sort of what follows after this. Now that we've heard from both sides, hashtag cancel Spotify, delete Spotify was still trending just as of yesterday. And it'll remain to be seen if we see more artists potentially following suit and this creating a bigger headache for Spotify than it currently is right now. But it's a pretty big headache.
Indeed. Curious how big an impact that headache is going to be. Jennifer Sabajaja, Bloomberg Quick Take, thanks so much. I want to stick with Spotify, bring in Mark Mahaney of Evercore. Mark, just how big do you think this headache is going to continue to be for Spotify?
My guess is that they handled it reasonably well. If I, watched the Joe Rogan clip that you just put up, and especially what Ek tweeted about, posted about over the weekend, and they disclosed their rules for handling content. Seems to me like they addressed this reasonably well head on. I know the stock went up today. I think that was a little bit of Rogan. I think it was a lot more the fact that you finally had an upmarket uptake in a while, and that you were sort of moving a little bit beyond the Netflix overhang, because I think that's been a major overhang on the stock over the last week and a half too. So confluence of events helps the stock today. I hope that Spotify's addressed this issue, and it's an issue that whenever they went into podcasting, and they did in size 2 years ago with Rogan and other people, that once you get into content, you've got moderation responsibilities one way or another. Right. So they're going to have to deal with this issue going forwards a lot. It seems to me like they handled Rogan reasonably well this time.
Well, and we've certainly seen companies as big as Facebook handle misinformation issues, to not necessarily great effect. Do you see Spotify on that same scale, and do you think that they can manage this? This is certainly not going to be the last of these sort of crises.
I'm just hoping that Spotify learned a little bit from what Facebook has gone through. And I thought Rogan's again his clip and his message on Instagram. A lot of irony in all this, but I thought he handled himself well and talked about allowing thoughtful, balanced perspectives on some of these issues. I thought that was the right approach. I wish more people would take that approach. Anyway, whether Spotify really does or not, I don't know. It's kind of a character question when it comes to Daniel Ek. He seems to be a pretty thoughtful, moderate, and he also said he's got strong opinions about these, but he's not going to let those dictate what content gets shown or not. He just wants to make sure that what's out there is thoughtful, and if it's if they're widely spread or widely held scientific views, they should definitely be included. So it seemed to me like he took a nice, moderate approach to this. Hopefully he does this and he won't have too many of these. But if you're doing content again on the internet, you're going to have some moderation responsibilities, especially if you're a platform as big as Spotify.
Curious who you think has the power here. We saw Neil Young, Joni Mitchell pull their music. We've seen this before with Taylor Swift, pulling out of the Spotify platform. Who has the power? Is it Spotify or is it the artists? And tell us why that matters.
Well, what I found interesting is that Spotify was willing to, when Neil Young said it's Rogan or Young, Spotify made their choice. They said, well, we're going to go with Rogan. We really hope you come back, though, but we're also going to address some of your concerns. So it seems like to me like the power is really with Spotify. Now, if it was another bigger artist, maybe that would be different. But remember the controversy. I see you're showing Taylor Swift. There was a nice controversy between those. And I think Spotify kind of stuck with its guns over the years and kind of was consistent with its policies. Taylor Swift came back. I think for a lot of artists, Spotify is just one of their best distribution channels now. And I think especially over the last 2 or 3 years, one of the few really great ways for artists to make money was through digital streaming. The concert tours were canceled for much too long of a period, but it happened. And so you had no choice. I think at the margin, the streaming companies like Spotify gained more leverage over artists and over labels over the last 2 years. I think to me, that's the big so what of what happened.
So quickly, we got Spotify earnings coming up. We obviously saw what happened with Netflix is subscribers. Lots of concerns there about whether they'll continue to see that kind of growth quarter after quarter. Do you think Spotify is in a better position? And if so, why?
I think they are. It's also because I think they're earlier on. So if you add up all the users of Netflix, and they're about 2 or 3 people per account, you're talking about a service with 500 to 600 million users. Spotify is more like 400 million, and they only launched into about 80 international markets just in the last year. So I don't think they are as well adopted as Netflix is. But look, if Spotify's one of my top picks here. I think we've got a gross margin inflection point coming up. I don't think we'll have a problem with subs and MAUs, monthly average users. But Emily, if we do, you're going to have the same thing happen to Spotify that's happened to Netflix. I think that's a much lower probability in the case of Spotify. I just think it's 2 years behind, maybe 3 years behind Netflix in terms of its global adoption. And it's got a freemium model. So a freemium model means that the users can come from a lot of different directions. And I think that's a little bit of a limit to Netflix. Netflix may have to adjust and change that within the next year or two.
All right. Mark Mahaney of Evercore. Always great to have you, Mark. Appreciate your insights there. Coming up, a health startup that lets patients monitor their blood at home with a simple prick of a finger. Sound familiar? It is just the beginning, though, for the health startup Apellis. I'll speak with the co-founder next on how the technology works and where they go from here. This is Bloomberg.
I think at the end of the day, the COVID task force laid out a plan, the CDC laid out a plan. We have a way to continue to move America forward. It's by getting vaccinated, getting people boosted. The numbers show that with the Omicron variant, people got sick, but not as sick as previous variants or the beginning of COVID. Continue to wear masks, even just to protect yourself, whether there's a mask mandate or not.
U.S. Labor Secretary Marty Walsh earlier on Bloomberg talking about the Omicron subvariant and how it could impact plans to return to the office. The subvariant appears to spread faster than the original Omicron strain, but UK health officials say booster shots are an effective shield against it, which is perfect timing as the Moderna vaccine just received full FDA approval. For more on this, I'm joined by Bloomberg's Riley Griffin, who covers vaccines for us. So what is significant about this, Riley, and why did it take so long, given that Pfizer's got full approval back in August?
That's a great question. The full approval for Moderna is a really critical commercial milestone. I'll say that first and foremost. It's important to the business. These emergency use authorizations actually can be revoked at any given time and don't have much longevity to them. They basically dissolve in the wake of or after an emergency. So that Moderna now has this stamp of approval from the FDA means that its product will continue to exist post-pandemic. Why did it take so long? Moderna lagged really in submitting its materials to the FDA behind Pfizer. Pfizer had received that full approval back in August, and it had submitted its application months earlier. We know that at the time that Pfizer actually received that full approval, Moderna hadn't finished its application, and so it's taken a little bit longer for the FDA to review the typically thousands of pages and data points to make this decision.
So let's talk about what's coming next. As a mom, I'm waiting for vaccines for kids under 5. Do we have an update on that? I've seen reports about March.
So we've heard nothing from Pfizer. We're waiting on the data at this time. They actually provided an update in December, that they were going to change their clinical trial to study a 3-dose regimen, 3 shots instead of 2 in that under 5 cohort. But we're hearing signals from Dr. Anthony Fauci, from a member of Pfizer's board who formerly sat in the top position at the FDA, that they expect this to come within the next month or so, or before that March timeframe. I think one thing you might want to consider as a parent is it going to be that 3-dose regimen or a 2-dose regimen? Because in the wake of Omicron, we're seeing that it's much harder to prevent symptomatic COVID cases, including among children, with just the 2 doses. And so that's been the holdup and why many parents are disappointed that this hasn't come sooner.
Yeah, lots of people waiting. All right, Bloomberg's Riley Griffin, thank you for that update. Well, the ongoing pandemic has accelerated a transition in healthcare from hospitals to the home. And my next guest wants to stay ahead of that curve. Athelas, an at-home blood diagnostic device, just announced more than $130 million in new funding, now valued at more than $1 billion, Silicon Valley's latest unicorn. The vision to give patients and doctors the ability to monitor chronic conditions at home. Joining me now, Deepika Bodapati, co-founder of Athelas. Deepika, thank you so much for joining us. So this is an FDA-approved device that you can use at home. Explain the vision here.
Yeah, thanks for having me on today, Emily. The way that we think about chronic care is that folks who are chronically ill naturally need more care. And so this can't just be done when they're seeing their doctors or within the 4 walls of a hospital. This also has to extend to their home. You know, if we're monitoring them from their home and if doctors are able to collect more metrics from their home, we're able to see if their condition is worsening over time. And for those folks who are at risk, we're actually able to prevent their disease from escalating.
Now, when people hear simple blood test, a lot of people think of Theranos. I'm sure you've heard investors say that in the boardroom. How is Athelas different, and how do you battle that kind of skepticism?
Yes, no, I've heard of the company Theranos at this point. I think, you know, we really just focused on the data. Like for us, that was what it was. When we started the company was when all of the talks about Theranos really were beginning. And so we took a really focused approach on just clinical trials. What are the numbers telling us? You know, A/B testing and really getting that FDA clearance. And once we got that clearance, you know, we really felt like a lot of the skepticism was falling away. We're not doing hundreds of tests with a single drop of blood. We are focused on 2 tests and we do them really well.
So you've got this blood diagnostic product, also looking at blood pressure products, pill tracking, weight monitoring. What kind of future products are you considering developing, and how does that fit into the bigger picture?
Yeah, sure, Emily. The way that we think about chronic care monitoring and remote patient monitoring as a whole is really the future of healthcare is going to be in really smart passive sensors, in really intelligent software mixing with really intelligent hardware. And so what that can look like is intelligent sensors in your toilet, in your toothbrush, in your sink. We want to be passively monitoring different biometric data and seeing how all of those little puzzle pieces fit into the greater picture longitudinally.
Now, I know the goal at one point was to detect the flu or other diseases. Is that something that you're still working on, or perhaps preventing or detecting the next pandemic before it happens?
You know, I don't think we'll be able to do much for the COVID virus itself. But I do think that in a world that, where at-home mandates are possible and just being remote is likely going to be the future, I think that in that world, it's going to be really key for doctors to be plugged into patients' care. And when it comes to chronic care monitoring, or even something as simple as a checkup, patients who are doing telehealth visits need to be able to transfer their biometric data in a really clean way. We want to be able to help with that specific thing.
Well, certainly we'll be watching your progress as the healthcare increasingly moves into homes. Deepika Bodapati, co-founder of Athelis, thanks much. Coming up, more consolidation in the gaming world. Sony has agreed to buy Bungie, the game developer behind the popular Destiny and Halo franchises. More on the $3.6 billion deal next. This is Bloomberg. A few stories we continue to watch. The online word puzzle sensation Wordle has now been acquired by the New York Times. The Times says it purchased the game for a price in the low seven figures from its creator, software engineer Josh Wardle, who published his own statement on Twitter saying, quote, "It's been incredible to watch a game bring so much joy to so many, but I'd be lying if I said this hasn't been a little overwhelming." He also mentions his inspiration from the New York Times in the creation of the game, making this deal a very natural next step. Sony is spending $3.6 billion to bolster its stable of game-making studios. That's what the company will pay to Bungie, the U.S. video game developer behind the popular Destiny franchise. Buying Bungie will give Sony one of the most popular first-person shooter games to compete with the massive Call of Duty series, which Microsoft now owns through its purchase of Activision. And the former pharmaceutical executive known as the Pharma Bro has reached a $28 million settlement to resolve class action litigation. Martin Shkreli, a colleague, and his former company are part of this deal. They are accused of trying to gouge customers on an anti-parasitic drug. Since 2017, Shkreli has been serving a 7-year prison term for defrauding investors. Coming up, the supply chain's still bottlenecked. When does it end? We'll ask Flexport CEO Ryan Peterson. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco, and to get back to the markets and earnings season in full swing, one topic that's top of mind for investors. Our Ed Ledlow here to break it down. Ed?
Supply chains. If you were sick of me saying that in 2021, Emily, just you wait, because 2022 is going to bring a lot more. Look, we got NXP earnings after the bell. Strong outlook for the first quarter. We talked about earlier a range of $3 to $3.18 billion of revenue. But there was some really interesting commentary, because what they're essentially saying is that NXP, the second biggest supplier to the automotive industry, is seeing strong demand but low inventory levels for those end customers. In other words, the car companies that are taking the chips from them are putting them straight into products, goods that are ready for sale. They're not building up inventories. And this is a key point, right? Because traditionally semiconductors are a boom and bust industry, a boom cycle followed by gluts because people have overbought. That doesn't seem to be the case. So it's an interesting one to watch. The shortage kind of still seems to be there. And supply chains are the buzzword of earnings so far. Let's bring up this chart, really interesting. S&P 500 earnings we've had so far. These are the topics by word count that have been most mentioned. Top of the list, supply chain. You know, this has really been a key topic that analysts want to ask about. And they also want to ask about the macro picture. Apple, of course, did really well, circumventing some supply chain disruption, particularly in semiconductors, and limiting that impact to iPads. Now we get some information from the automakers. GM tomorrow on Tuesday and Ford later in the week. And look at how these two stocks have performed year to date. Remember, they did amazing in 2021. Both of them really pushing their stock higher. Ford breaching $100 billion for the first time. But since the turn of the year, both have really dropped off in negative territory. Ford kind of outperformed, but you know, this is the question. What is that semiconductor supply like? How was it in the fourth quarter? And what is their outlook for the rest of this year?
All right, Ed, thanks much. I want to stick with the supply chain and talk about when we might finally see that light at the end of the tunnel. I want to bring in our next guest, Ryan Peterson, CEO of Flexport, a platform that connects everyone in a company's supply chain to help simplify global trade. Ryan, you have so much insight at different links of the chain, and I want you to take us to those critical ports in LA and Long Beach. What's happening there right now? What's status quo?
Yeah, hey, great to see you. Thanks for having me on. We're seeing longer delays than really ever at the port of Long Beach in LA and across the West Coast. Shipping from China to the United States, actually really from anywhere in Asia, has reached the longest transit time that we've measured last week. And it looks like things are improving, but that's only optics. If you go down to the port of LA, where they used to have all these container ships waiting off the shore, they've actually changed the rules to force those ships to wait further out to sea to avoid the pollution, which is a great rule, but you can no longer use that as the indicator. Flexport's developed our own, it's called the Ocean Timeliness Indicator, which tracks the actual transit time of the goods. And that's where we see this data that's taking longer than ever.
So are you saying things are actually getting worse? And then what does that mean for the outlook for the rest of the year?
Yeah, I am. It's been getting worse and worse every week. And it's very hard to make predictions about the future right now. There's a couple big factors that are making it almost impossible. First of those is that on July 1st of this year of 2022, the union that runs the ports, this is called the International Longshoremen Warehousing Union, they have their contract expiring on July 1st. And we expect in years past, the last times this happened, you get slowdowns as the negotiations happening and occasionally a strike. So that's a big wrench that could be thrown into the machine that's very, very hard to predict. And at the end of the year, July 1st of 2023, there are new regulations coming from the IMO, International Maritime Organization, which requires all the ships in the world to reduce their carbon emissions. And the only way to do that for these ships is to actually sail slower. And so you're going to see a big slowdown starting at the beginning of next year as the ships have to start sailing slower to reduce their carbon emissions.
Now, we've heard CEOs over and over again say that they're continuing to face supply chain issues. No surprise to you. Elon Musk on the Tesla call, for example, saying they continue to be chip limited, but Apple somehow defied the trend, and Tim Cook actually said he had line of sight to things getting better. I want you to take a quick listen to Dan Ives, a longtime Apple analyst from Wedbush Securities, and what he had to say about that.
As hard as the supply chain is to navigate, I mean, Apple's really doing it at the front of the line, and I'd say that the damage has been contained. Supply chain improving in March, that's going to be a big focus tomorrow for every tech investor and really anyone in the food chain. That contrasts some of the fears that we're seeing, even from a Tesla and others, about supply chain issues lasting throughout all 2022. That's a key.
How is it, Ryan, that Apple isn't feeling the pain, but everyone else is?
Yeah, well, remember, Apple's one of the best run companies in the world with great margins and the ability to spend more to speed things up and the ability to pay for air freight and premium services. And not every company has access to those resources and the ability to pay extra and move things. And Apple's margins allow them to do that. So it's the average small company does not have the ability of these big companies to do things. You saw also like Walmart chartering ships, another Home Depot, I believe, did as well. That's not something that an SMB, a mom and pop, or even a medium-sized company can entertain.
You've long said that tech can be part of the solution, and that's the value proposition of Flexport. You know, what's it going to take? How are we going to fix this?
Well, technology has to play a key role. Now, in the longer term, we're talking about real robotics technology, automation of these ports, ability to improve our productivity. American ports operate with a productivity, so a number of containers per hour of labor lower than Mombasa, Kenya. So we don't have very productive ports. We need to invest in automation. There's a big role for government in helping to do that since they own the ports. Shorter term, because we can't wait years and years for new robots and things to come online, there's got to be better technology like what Flexport offers, which gives people visibility and predictability of when is that cargo going to arrive, give them options, allow them to load balance across providers, across ocean carriers and airlines, find space, find capacity, get things moving, even in a difficult market. One of my big fears for brands out there, for retailers, is that they overorder. Because right now, everything, it's hard to get semiconductors, it's hard to get inventory in stock. And so you're ordering with long transit times. You might order too much stuff and find out, hey, there's not enough demand for our products. You've seen that with some companies out there recently. I think you'll see, my big fear is that you're going to see a lot more of that in the future. And a longer transit time, if you don't have good visibility of when stuff is going to arrive, can lead you to keep ordering more stuff to try to get cargo in. Next thing you know, you have too much inventory, and that can be really bad for business.
Last quick question. SpaceX just won a contract with the Air Force to work on ways to transport military cargo around the world, as well as humanitarian aid, on a rocket. You seem excited about this idea. What do you see as a role for space technology potentially in the not so distant future?
Well, I'm a huge SpaceX fan and a small SpaceX investor, so really excited to see what's possible there. I think reality is that's probably decades away from being something that's commercially viable. The reality is you need launch infrastructure on the other side of the world. These rockets take days and weeks to plan the launch, and if there's bad weather, it can't launch. And by the time that thing went off, you could have just flown an airplane. So I think this is much more of an R&D project than something that's near term, but obviously very excited about it.
Okay. Ryan Peterson, CEO of Flexport. Appreciate you taking the time to join us, even with the bleak outlook on the future. Coming up, FTX now valued at $32 billion. We will speak with FTX CEO Sam Bankman-Fried about the latest funding round and all things crypto. Coming up next, this is Bloomberg. Bitcoin is closing out a rough month, with January declines topping 20%, the worst since last May. The largest cryptocurrency spent 65% of the month in decline, and other digital assets have also suffered, like Ether, down roughly 30% since the end of December. Let's dive into our Bloomberg Crypto Report with Bloomberg's Sonali Basak. Sonali, take it away. What's happening here?
Yeah, let's look at the last couple of days in Bitcoin, because we have had a little bit of a lift in prices here, helping us bring Bitcoin even further off of its lows. So we're looking at Bitcoin at $38,500 right now. But let's put that into context, because even though Bitcoin had dropped way down to $33,000 this month, we are still off the highs of $69,000. So what does that mean? It means that we are coming back up, Emily, but we are still looking at the worst month here since the 2018 crypto winter. People want to look for that resistance level, and hopefully we don't go too much further down from here. But I want to also draw us over to the private markets, because even though these crypto prices are bringing down other related assets like Ethereum, like even Coinbase, for example, we are seeing FTX go through some very massive increases in valuation in the private markets. Raising money twice in the past year, we have them now jumping almost twice the value that it was just about 6 months ago. Very massive increase, over to $32 billion.
Sonali, we're also talking to FTX CEO Sam Bankman-Fried, and he is here with us now. Sam, thank you so much for joining us. Obviously, this is a huge number, your third raise in, I believe, 9 months. How are you thinking about this valuation, and how do you justify it, aside from the fact that investors are willing to pay it?
Yeah, and thanks for having me on. I'm really excited about the growth that we've had, and I think that's what I keep coming back to, is that over the last 2 years, we have been consistently the fastest growing crypto exchange across the world. Our volume is up massive amounts year on year and continues to climb in market share. I think that's the biggest piece of it. And then I think secondarily, us demonstrating that we can operate well on multiple fronts, including on the regulatory and consumer fronts.
Sam, why do you think the crypto bear market, Sam, hasn't impacted what's going on here? Obviously, we heard Shonali's report there about what's been happening with the numbers. Is that not something you're feeling from investors?
It's a good question. And I think that to some extent, we've just seen a divergence between different companies and how much confidence investors have in them, especially during a tougher market segment. But I think there's also been a substantial public versus private divergence here, where at the same time that we've seen publicly listed equities get hit, the private venture market has been relatively more robust, and VC funds have been able to raise more money successfully.
Yeah, speaking of that private market differential and valuations here, does that create more of a reason for you to stay private and for more companies to sell to companies like you?
I think it does. I think that, we've been evaluating whether it makes sense for us to go public at some point. We're on the fence about that. We could imagine doing it. We could imagine not doing it. But I think certainly looking at the relative market environments is one of the inputs to that. And this is definitely something that's making us not feel a ton of urgency to go public.
Well, it's interesting because you have an Ontario teachers, for example, participating in this round. And I'm wondering if you're seeing more large institutional investors seek access to cryptocurrency through companies like yours rather than direct exposure.
Yeah, I think that's right. And I think that it's in some senses easier, even just from a custody and clearing perspective. They're well used to buying into stock, whether public or private. But if they want to buy into tokens, they'd have to figure out how do they hold them? How do they report them? What does it mean from a tax and compliance and reporting perspective? The same sorts of things that banks are going through as they investigate what it would mean for them to have any cryptocurrencies directly on their balance sheet or custodied on behalf of customers.
You've got a lot of cash to work with now, Sam, and you've expressed interest in M&A. Curious what some target areas are, especially areas that might help you compete with the likes of other deep-pocketed exchanges out there, whether it's Binance or Coinbase and beyond.
Absolutely. I think there's a few versions of this, and we've done some acquisitions sort of historically that I think point towards what we might be looking at in the future. And I do think acquisitions are a big part of this. You can look at the LedgerX acquisition, which we're really excited about, to help us build out our, licensed footprint in the United States with the CFTC. You can look at the Blockfolio acquisition from, a year and a half ago, which helped jumpstart our consumer business. I think that those are two types of deals that we are continuing to look more at and that we think might be, really value additive.
You've raised billions of dollars in the last year, but really you can potentially buy something much bigger if you wanted to borrow money or get more financing in the future for an acquisition. How big are you willing to go, Sam?
It all depends on the context. And I think one of our kind of really driving forces as a company is not having an arbitrary restriction on that. There isn't a point above which we are unwilling to go. It's just a question of what makes sense. We're willing to go substantially bigger than those if it's the right opportunity, if the company is excited about it, if we're excited about it, and if it's a really good fit for our business, we're absolutely happy to entertain it.
Obviously, FTX has really banked on some of these big sports partnerships. Tom Brady, one of those partners, and there's increasing talk about the R word, and that is retirement. And I'm curious, if Tom Brady retires, what does that mean for Tom Brady and FTX and Tom Brady and crypto? Do we see more involvement there?
It's a good question. In the end, he's the person to ask, and I can't speak for him. I don't know anything not public. I'll say what I said earlier, which is that our intramural football team has an opening at quarterback. He might be able to beat out our incumbent. That's always a possibility, but who knows?
All right, well, we'll be watching for the next sports partnership with FTX and beyond. Thanks so much, Sam. Good to have you back on the show. FTX CEO Sam Bankman-Fried and Bloomberg's Shonali Basak. All right, coming up. He started the company when he was just a student at Stanford, but now the CEO of Bolt, the online checkout company, is stepping down. The series of controversial events that may have led to his decision fit for an episode of HBO's Silicon Valley. That is next. This is Bloomberg.
we have been known for pushing the envelope on culture. We defined what's called our conscious culture, which is how you bridge execution with humanity. And one day we saw news of some smaller companies implementing a 4-day work week. And so as an executive team, we had it on our docket to discuss how it might fit into Bolt. And, you know, we firmly believe in action, and we couldn't think of a good reason why this wouldn't work. It was kind of a no-brainer.
That was my conversation back in October with the CEO of Bolt, Ryan Breslow, on the company's decision to try out a 4-day work week. But clearly something wasn't quite working out with the company's culture, as the 27-year-old Breslow is now out as CEO. Bloomberg is now reporting he will become executive chair. For more on all this, I'm joined by Bloomberg's Katie Roof. Katie, a lot going on here. Ryan Breslow, a very prolific tweeter, and especially over the last few days. What can you tell us?
Sure. Yeah. Good to be with you. Yeah, this company has been the talk of the town lately. Certainly many people in the VC and startup community bring this company up in conversation, partly because, as you mentioned, the CEO had a pretty lengthy Twitter thread the other day in which he accused Stripe and Y Combinator and also the media of having some sort of mafia, making it so that other startups couldn't succeed or something like that. But it was interesting because here they just became a decacorn and raised an $11 billion valuation. But he was trying to say that, you know, Stripe made it difficult for them. And certainly that tweet generated a lot of controversy and negative tweets from a lot of, you know, some defensive tweets, but a lot of negative tweets from the VC community.
Well, let's talk a little bit more about this $11 billion valuation that seemed to come out of nowhere. The claim that BlackRock led the round, BlackRock then saying they didn't lead the round. What's happening here?
Yeah, that's interesting and certainly something we have asked about. So, yeah, I mean, you know, just less than 2 years ago, they were not even a unicorn. And then all of a sudden last year, they say they raised at a $4 billion valuation and then a $6 billion valuation and then an $11 billion valuation. And then so, you know, it does feel to some people in Silicon Valley like they kind of came out of nowhere. I mean, they have been around longer than that, but you know, they have been suddenly raising at a time when, in fairness, many startups have been raising at high valuations, especially in the fintech category. But there have been people that have said quietly and now publicly on Twitter that they didn't feel that Bolt, you know, warranted the valuation. There have been tweets with people saying that they didn't have revenue that matched what they thought the valuation would be. But Bolt's saying, oh, all these VCs, it's because they're investors in Stripe or they have their own interests. But there's certainly been a lot of controversy that's generated around their valuation. And then, of course, the tweets. And now today you have the CEO saying that he stepped down.
Now, talk to us about these valuations. Obviously, everyone is worried about the next Theranos, and yet valuations seem to keep going up and up and up. How are investors, you know, kind of balancing that, you know, this learning that they need to be a little bit more skeptical with the fury and enthusiasm and the amount of capital that is available?
Sure. And the funny thing is, investors in Silicon Valley, they like to say Theranos wasn't a Silicon Valley company because it was mostly not institutional VCs, although they did have Tim Draper in it. But, you know, even still, there was WeWork, which, you know, is now a public company, but certainly went through a very rough patch. And, you know, some other companies that have gotten a lot of scrutiny. And so, you know, there is a wariness and concern where, on the one hand, VCs do feel they need to pay the price to get in and get access to some of the best, you know, rounds. But a lot of times they're betting on unproven businesses. They're betting on people claiming that they are going to do what they say that they're going to do and that they've already, you know, they're trusting that that they're telling the truth. And so in this very competitive environment, a lot of times the due diligence periods have gotten really short and people aren't spending as much time as they used to looking into rounds and vetting them because if they're, you know, waiting around asking too many questions, then they've missed out and they haven't gotten access to the round. But, you know, we're seeing some people getting a little spooked because public markets public tech stocks aren't doing as well as they used to.
Right.
And so people are, scaling back a little bit.
All right, well, we'll continue to wait for more details from you. The story behind the story, Bloomberg's Katie Roof. Thank you for that update. And that does it for this edition of Bloomberg Technology. Make sure to tune in throughout the week. We're going to continue our coverage of tech earnings, Alphabet Tuesday, Meta Wednesday, and more coming up on Thursday. Amazon and more. You don't want to miss our analysis. I'm Emily Chang in San Francisco. This is Bloomberg.